Hello, and thanks for joining us today. Have you wondered how your bank or building society interest is taxed? Today, we want to look at taxation of savings interest. What is bank or building society interest? When you put your money into a bank or building society account, it may earn interest. Interest is money the bank or building society pays you in recognition of the fact that they hold money for you. Interest actually counts as income for tax purposes on the date it is credited to your account. Most bank and building society income is taxable. So today we want to look at how the taxation is done. Normally, we might think of income as something that is earned, for example, income from your job or from self-employment. However, bank or building society interest is a form of passive income. It is taxed differently from earned income, and we want to look at it today. Okay, so how is bank or building society interest taxed? Bear with me as I share my screen with you as always. Just bear with me. We are going to have a look at how bank and building society interest is taxed. So let's have a look at what we have on the screen. Okay, so we are looking at taxation of bank and building society interest. Most people will have no tax to pay on interest they receive from bank or building society account due to personal savings allowance. So we want to discuss what personal savings allowance is. Normally, just bear with me as I continue sharing my screen. Just look on the screen. So we are discussing how bank and building society interest is taxed. We've got two aspects. One of them is under the personal savings allowance, and that is what I want us to discuss next. Okay, so personal savings allowance, it will depend on the your tax rate, as we discussed in our earlier videos. We have three categories of tax rates. We have the basic rate, which is earnings from £0 to £50. And then we have higher rates, which is earnings above £50 but up to £150. And we have additional rate, which is earnings if we earn above £150. Now, the way personal savings allowance work is that if, let's say, you are a basic rate earner, then in terms of your savings income, the first £1,000 in 2020-21, you will receive it tax-free. That is for your savings income if you're a basic rate earner. If you can see on the screen, that's PSA is £1,000 for the basic rate earner. If you earn £1,000 of interest in 2020-21 tax year, it will not be taxable. Any income above the £1,000, if you're a basic rate earner, will be taxed at 20%. The next step that we look at is if you are a higher rate tax earner. If you're a higher rate tax earner, then the first £500 that you earn will not incur any tax. I mean, the first £500 you earn in savings income will not incur any tax. Any excess above £500, if you're a higher rate tax earner, will be taxed at 40%. Then the third category is the additional rate taxpayers. They are earners whose income are above £150. If you're an additional rate taxpayer, then you will not be entitled to any personal savings allowance, which means any savings income that you earn will be taxed at 45%. Let's continue on what is on the screen. Okay, so the next one that I want us to look at is the starting rates for savings. Aside the personal savings allowance, another category of how a savings income is taxed is the starting rate of savings. You may also you normally get up to 5,000 of interest, and if you fall within the starting rate for savings, if you earn 5,000 pounds of interest and you fall within a starting rate of savings, the whole of the 5,000 pounds will not earn any tax. So let's have a look at what is on the screen. Okay, so as I said, you may get up to 5,000 pounds of interest and not have to pay tax on it. This is your starting rate for savings. The more you earn from other income, for example, your wages or pensions, the less your starting rate for savings will be. If your other income is, let's say, 17,500 or more, you are not eligible for the starting rate for savings if your other income is 17,500 or more. The reason being that, the personal allowance for 2020-21 is 12,500. And we said the first 5,000 pounds, if you're within a starting rate of interest, will not be subject to any tax. So when you add the 5,000 to 12,500, you get 17,500. So you can earn up to 17,500 without paying any tax. That is if your other income is equal to the 12,500. However, if your other income is less than 17,500, that is your starting rate for savings is a maximum of 5,000. Every £1 of other income above your personal allowance reduces your starting rate for savings. I will share an example with you very soon. So let's say every £1 you earn above the personal allowance of 12,500 will reduce the starting rate of savings, that is the 5,000 pounds. So let's have a look at an example. I'll just put an example on the screen and we can go through it together. I'm going to stop sharing this screen. I'll come back to it. But in the meantime, let's have a look at an example. Just bear with me. Hello. So let's have a look at the example on the screen. Let's say you earn, hello. Let's have a look at the screen. There's an example on the screen. So if your other income is less than 17,500, for example, you earn 15,500 of wages and you get 200 pounds interest on your savings. Your personal allowance for 2020-21 is 12,500. It's used up by the first 12,500 of your wages. The remaining, that is the 15,500 minus the 12,500 will give you 3,000. Yes, so the remaining 3,000 of your wages reduces your starting rate for savings by 3,000. So your remaining starting rate for savings will be 2,000. That is a 5,000 minus the 3,000. This means you will not have to pay tax on the £200 savings interest. Yeah. So these are the two main categories of how the savings income is taxed. I hope it's been useful to you. I'm going to stop sharing my screen on the example and go back to the video. All too soon, we've come to the end of this session. So we discussed taxation of savings income, and we looked at two main points. The first one was on your personal savings allowance, of which we said it will depend on your tax rate. So we have basic rate tax payers who are those who earn income from £0 to £50. And then we have higher rate taxpayers who earn income from above 50,000 to 150,000. And then additional rate taxpayers who earn income above 150,000. For people who are within the basic rate taxpayers, their personal savings allowance will be £1,000. That's for tax year 2020-21. And the individuals who are within the higher rate taxpayers, their personal savings income allowance will be £500. For individuals who are additional rate taxpayers, that is, their income is above 150,000, they will not be entitled to any personal savings allowance. The other thing that we looked at was the starting rate. We said the starting rate of interest is 5,000, so you can earn up to 5,000 if you fall within the required limit without paying any tax. That's 5,000 of interest income without paying any tax. And normally the personal allowance for 2020-21 is 12,500. So if, let's say, your income for 2020-21 is 17,500, inclusive of the interest, then you will not be entitled to pay any tax. However, if your other income is more than 17,500, then you'll be entitled to pay interest. You pay tax on your interest. If, however, your other income is less than 17,500, but it's more than the personal allowance, then for any extra £1 that you earn above the personal allowance, your starting rate of savings is reduced by £1. And that's why we went through the example. I hope it's been useful to you. Hope you can join us again tomorrow. Tomorrow we are going to discuss the taxation of dividend income. Thank you very much for your time. Stay safe and see you again tomorrow. Thank you.